How's it going, everyone? Today we are doing the June review picks. How I've laid this out is we're going to first look at the earnings time thread that I took on MU. Then we're going to look at the swing trades, and then we're going to look at the day trades. For the day trades, I will be editing out the parts of the video where you see me flip through the charts, so that way you don't have to watch me flip through the charts. So let's get right into this with MU. And I think it's better to show MU through here. So here's the setup on the earnings time spread. We had a very low times exceeded, very good difference, high option liquidity. So this was a really nice earnings time spread setup. We got filled at the 124 calls for an 83-cent debit. It was filled right around here, 11:30 a.m. We exited the next day for a 60% win. And here's what happened. So I set a target for 40%, and I got filled on the open. And the change of 4.6% was less than that average move, which actually should say average move. Less than the average move of 5.4%. So what I saw in this scenario is that when we have this gap down and it's within that percent, I could probably set a more aggressive profit target. Now, I still got a nice fill, and I got a pretty favorable fill. But if the move is going to be more outsized on the open, then you're going to have to do some more cowboying. So based on where the stock comes up in the open, and here's where you want to get in pre-market, that's when you can adjust your profit targets or your order targets on the position. But nice win on MU. I think we're going to have some more earnings time spreads coming up this month. All right, let's go to our swing picks. And we're going to go in order, starting from WDC. This was a put credit spread, so we took this on the 31st. And we took the 71.70 June 21st PCS for 20-cent credit over here. And we managed to get out for pennies somewhere over here on this. Took a 90% profit on that trade. So very nice win on WDC. What ended up expiring worthless. Here is the 21st. Got nowhere close to that amount of money. So all in all, pretty nice spread. And not really too much to change here. This is a nice setup, and we'll see if WDC sets up like this post earnings as well. Next stock was T2 on 6.4. So here is 6.4, and let's zoom out over here. So this stock had a nice head of steam, was filling in the gap. We knew we had a tiny chance to go ahead and go over here, as well as over here. We had a couple of little gaps coming in the way. So we had a chance to take a nice overnight swing on this, and that's what we did on the next day. Got in around 166-ish, got out around 168-ish. Did end up hitting this top of the support level and then rejecting off. And then looks like it's had a pretty strong rejection off of that level. So pretty choppy stock. I am curious to see how the price action looks like, on a longer term basis. So it's made a nice run, and it's just been pretty choppy on a very longer term basis. But that was a nice quick win on T2, and the important thing here is that our TA was correct. We saw that this was resistance, and here it ended up being a pretty strong point of reversal on the stock. So that was a win. LSXMA, we took this stock right here at the 4th, had a beautiful breakdown, take a couple days to compress, pull back to the 8 EMA in the top of the channel, and then we got the poke below here, and that's when we ended up taking our profits. Ended up being pretty nice timing. And on this bullish engulf, that's where even if you were unsure about the trade or you scaled out, you could have scratched out of some of the trade here. Or when you get this really big move up and then you get this move down right here, you also have another opportunity to scratch out of the trade. So there was some scratch potential if you did not exit on this trade, but overall, this was a nice chart, pretty nice setup. We had good patience, and our thesis was right. At a pullback to the 8 EMA, we get that next leg lower, and that's exactly what we happened, and then we took profits on that move. TSM, we took this guy on 6.5. So here is 6.5 right here. Nice breakout on the stock. It is a bit of a patchy stock, so don't want to get too crazy with it. But I do believe that we took profits on the 7th right here. We got a high somewhere here on the 7th. And then it actually ended up continuing up pretty nicely all the way until we got these really high volume hammers, this bearish hammer, and then this long red candle on very, very high volume. So those could have been some exit signs to get out of the trade. So I think with TSM, there may have been some opportunity to stick in the trade a little bit longer. If you take a look what the market was doing on the 5th, I think our main concern was CPI. So CPI ended up being quite positive on the 12th. And that's exactly what happened. But I think we could have stuck with it at least until the 10th. And on this nice pop-up is when we can take some profits on the stock. So I think there was a potential to get a little bit more profits on this trade, but we did get a nice win on this guy. Okay, U was the next one. This was a long guy. Still has some chance to go down. We took the trade here, scaled out of the trade into profits all the way through here. And then I took partial profits on the first somewhere over here. So really nice win on U. If I look back though, if I had my original swing scalp move and I took a 1 ATR profit on the entire position, I would have made more money. So I'm still playing around with the idea of scaling in and scaling out. It's a little bit more management, but it's a little bit more of a dynamic profit-taking system. However, if it turns out that just setting that passive target is a good way to make money on the trade, then I think that is probably something that I will do. So Unity was a nice stock, really nice trend. I think the trend strength is sort of waning a little bit over here. It's just been kind of flopping around, not doing too much. Market has been fairly strong. So we do have that in our favor, or that supporting the stock relative weakness. But yeah, not too much to say on U. I've talked about it a lot in prior videos. I think this is just a really nice entry point on the 13th. And here is our pick. We had our market bias lined up on the 13th as well. And the stock did what we wanted to do. The market did not exactly what we wanted to do, but since we're in the right stock, we're able to get out for a nice win. Here's cost. It's like a pretty nice setup right now. So we took cost on the 17th. We took some small profits on the 18th, which ended up being pretty well timed considering that it pulled back. Now it's still intact on the D1. So if you were patient on this stock and it popped up over here, that's another good chance where you can take profits, and you would have gotten a pretty nice move. That's a 1 ATR move on this stock. So could have gotten a pretty nice move on that guy, but had to be patient. So it could have worked. Could have worked pretty well. But if I look at what happened on the 18th, I think I panicked a little bit prematurely here. And actually, I got in on the 17th, I held on the 18th, I got out on the 20th, but I got out near the high over here because I had panicked on some of these long red candles coming into play here. So, yeah, Costco, I don't know. I did take profits on this. Ended up being patience was a better way to stick with the position. So if I was very nimble, I think I had the right exit. But I think maybe being very nimble on this guy was not the best move. It turns out being very patient was the best move. The flip side to this is that I didn't have a lot of market confidence to be patient on a stock like this. Because the volume rally is so light, I don't want to be caught in so many swing trades. I've been keeping it pretty light. So that was I think more of a market justification than a stock justification to get out of the trade. Now, when it's made a big move like this, I don't know if we're going to get as much follow through. I probably want to get in on a dip, hugging this level right here. And even so, like this probably sets up better for a day trade on a day like this than maybe another type of trade. So yeah, that's cost. I think it's an okay trade and result. I understand the justifications of why I did it, but this is maybe more of a refinement in the sense of leaning on the D1 a little bit more. All right, AEO. We took this stock at the 20th, popped up, didn't panic, and then we took profits somewhere around here on the 2nd when it broke through here. Still looking really relatively weak, and there may be some chance for this to continue lower. But I think I was rebalancing some portfolios over here, closing some positions, so I ended up taking profits on that. My original target of over here, I think my original target was $19. So we got pretty close to that original target, 8 cents off. So would have not have been a bad close. I think it probably would have still hit that target. Given that in any sort of market stalling, I would expect this stock to end up dropping. And those are our picks. So we had all wins on our swings, which was very nice. We had a couple of room for improvements in terms of holding swings, managing swings, but all in all, I think we had fairly good game plans. We played it well with regards to the market, and we adjusted our plans when things didn't go as we expected it to. Okay, here are the day trading picks. We are going to start from the beginning here with ARM. And ARM long was on June 10th. So here is June 10th on an HA reversal. All right, so we're going to get over here to ARM. So here is ARM on June 10th. We're also going to take a look at SPY on June 10th. Okay, so here you can see what we're seeing, I guess, in ARM and SPY. ARM had a pretty big move higher. On the open, market had a gap down, tested the bid, and then started to rally up on the 10th. Then it got kind of weirdly choppy over here later in the day. So some awkward garbage volatility, but ARM made a pretty big move and then ended up compressing for the rest of the day. So I mentioned that if it was an HA reversal on HRM, didn't get in on the trade. I think it may have triggered here at 12:15 or even over here. So if you got in at 12:15, you had definitely had a chance to scratch out of the trade a couple of times. So not the initial over here, but certainly if it doesn't start to produce at this point, you could also scratch out when it gets over here or even scratch out when it gets to over here. So I'd have a target out for a scratch or a very, very tiny loss on the stock. This was a decently weak pullback, but we didn't get any volume on this move up, and that was sort of the issue here on ARM. So looking back, I mean, I did like the setup. I think the recommendation I would have given is like we had to see a nice bounce with volume, which gives us some more conviction in the move. You can see that we have some volume coming in here, a couple of light volume candles, some more volume coming in here. These are tiny body candles, fine, but this candle needed way more volume, right? There's no way that this doji should have more volume than this green candle. So that is a huge sign of weakness in the stock. Needed some time to digest the gains, but then it continued on the next day. So this is where actually holding it overnight would have made more sense because it held all of the gains, and then you could ride the move higher and then take profits. And we're taking some pretty nice profits on the move here. That's $5 on that guy. All right, so that's ARM. Next one, also on that day, is APTV. So we had APTV short on a low of the day break, and I believe I remember this day. Actually, I think this was the 11th on. Maybe it was the 10th. Let's see. We're going to go back to APTV. Okay, so here is APTV. It was my mistake. This is actually on the 11th, not the 10th. So here is SPY on the 11th. You can see we had a kind of a weak bullish trend day, I would say. We got this probe again for support, a sharper probe, a pretty nice response up from buyers. And then we had some just chop around near what looks like to be this some level over here, trying to fill in the gap. We do get that fill in finally over here. We rise up, and then we see the next level of support, or next level resistance, sorry, on the market. Now, APTV had a nice move down, fairly low volume, and then right here, through this high volume breakout, this is where the volume picked up a little bit, and here's where we got some very nice follow through on the stock. And I think we held pretty much all the way till almost the end of the day here. Really nice win on this stock. This is an ideal win, in my opinion. And this is a really great setup that I like. We get this first leg lower. Can't get anything off the deck in terms of the price action. And then when buyers are finally exhausted at this level and we get the breakdown, that's when we know that we're ready for the next cycle. We knew that even though the market was going up at this time, if you look at, this is going from 2 all the way to 4, right? Here is 2 all the way to 4. Market went up a little bit. The stock got dragged up a little bit. As soon as the market stalled at 230, this stock started to go down. And that's all we needed the market to do. We just needed it to stall. APTV, very, very nice win. Okay, next one here, shop on 6/14. So let's look at this setup here. We had broken through the 50 SMA. We had some room until the 200 SMA. Wasn't the best D1 setup, but certainly viable as a day trade. And we had some room over here. So shop was a pretty nice setup on the D1. I believe SPY had CPI on this day. Looks like we had a big, or sorry, it was after CPI, my mistake. So let's go over here. Yeah, so this is a pretty LPTE day for SPY. Just digesting gains. There's some buyers coming in over here. Sellers are fighting it out. Pretty dead day. So we needed a stock that was moving. It had high volume on this day, high R-vol, good volatility. Let's take a look at how it looked on the 14th. All right, so we had this move up. We get this long red candle on the open, and it stalled, and then we started to climb up higher. All right, this is some good stuff. So running up higher, this is some nice volume coming in on the stock. And just grinding higher, it pushes up, comes back to the EMA, pushes up. So we have these red candles in here, which are, there's a kind of a few too many red candles for my taste. So this is good trend strength. It's not the best. I maybe rate it, decently bullish, but not like very, very maximally bullish. We knew the market was going to do nothing. So I think I got in somewhere around here. When the video came out, actually, I think the shop was somewhere around here. And you could ride this guy up. We get this bearish engulf, but it's quickly erased over here. We also get this also kind of bearish hammer over here pretty quickly after this bearish engulf. So that's kind of another sign of weakness. Compresses for a while, and then on this sign, I decided to take profits on a double top. So exit out over here, and then we get a pretty high volume. This is actually a pretty interesting clue. We get a pretty high volume doji over here, which is a sign of weakness relative to what's going on here. This should be way lower volume. This is a pretty low volume. This is pretty high volume, and then we get a nice smackdown over here, giving up the gains. So you definitely got to get out over here. This is a sign of some confirmation, and we get some follow through over here. We're coming back down, and then we get a really, really high volume doji at the end. So that is signaling some stopping volume on this trade. The volume of this candle should be less than the volume of that candle. And when it's not, we have some stopping volume. And then we start to see a little bit of a pullback, another chance to get out of the trade over here. But this is why you got to be careful when you trade against the longer term trend. There's going to be TA that just kind of comes up kind of just all over the place. Huge web of TA. And you can get some of these sharper reversals on these stocks. So have to be very, very careful. That was your only chance to exit, really. And then you don't get another chance until literally the 5th. Stock is dead for that time. So pretty tiny window. Okay, SEDG on the 18th. So here is SEDG. The stock has certainly dropped since the 18th. Okay, so let's take a look at that. So SEDG, this ended up being a loss. I remember that I took it over here on the live stream. And then my main mistake, I think I just didn't time stop out of the trade. If I look back on this, 1240, I had until 140 to time stop out of the trade. Didn't happen. Didn't quite get to my target. And then I actually had to eat up a loss towards the end of the day on this guy. So that was sort of my mistake on this guy. I had a chance to time stop out. Didn't quite get to it yet. 1245. So that was a mistake on my part on SEDG. But it was a good setup. And actually, I mean, if you think about it, it doesn't really, reverse super hard. So if you hang on to that, this actually would have been an overnight winner. So that and ARM were good picks that just I didn't, because the day trade timing, it didn't quite work out in my favor. So I just needed more time on those trades. Then that is a high volume doji. Okay, next one on 6/28th, we have Wolf. Beautiful breakdown on this stock. Not the most bearish chart, but certainly not very bullish. It's sort of trapped in a range. And we have a lot of volume and a lot of volatility today, so certainly a good day trading opportunity. The market is very mildly bearish on a day like this. So here's Wolf. We got the gap down over here, testing the bid, and then we end up cracking through it as we exhaust out a lot of these buyers. We prick through it once, buyers come in and test it back. You can see how low volume this test is, by the way, as well. High volume over here, very low volume relative to the other bars on this test. And then we get another high volume red candle, tiny volume. This was a sign of weakness. Look at this super high volume doji, doesn't get anywhere. And then this is actually the peak of the move, and we start to reverse back down. So as long as that's true, then we're in good shape. The concern here was actually over here. We got this really high volume doji that actually didn't end up getting anywhere. So that was a nice sign of weakness over here. And then it looks like this was one clue, this bullish hammer, and then we're getting some fall through volume on a really, really high volume candle here compared to what we're seeing here. So some more volume is coming in on this, and it ends up reversing. So I ended up taking profits. I remember I took Wolf somewhere over here at 12.10, and I actually took profits somewhere over here. Or maybe it was 12. When did I take Wolf? But this was a day trade. Since I took it so late in the day, I knew that there was a chance it would retest the low of the day, and that is where I took my profits. So it was one of those situations where the best entry was actually far earlier in the day. Like the big meat of this move was really from here to here, right? That is most of the meat of the move. So because I missed most of that, and I was still biased on the stock in a very shorter term, I felt pretty good about holding it and taking profits on the open, which is what I did. So nice win on Wolf. Next one was Google, and I took Google long on 6/21. Google's a nice looking long chart. So here's the market on 621, gap down, LPTE, low volume, fairly garbage. No, I'm not going to pause the video as much since we are pretty close to where we got to go. And actually, I didn't even trade Google. I traded, I believe I traded Goog instead. The same thing as far as I'm concerned for trading, although I know they are different companies in terms of the stock exchange, different tickers. So yeah, so I got in at 181.50, got in somewhere here, was breaking the high of the day, grinding up slowly, some decent volume on this stock, nothing crazy, but nothing low, and it was defying the market. It's been rising up higher, compressed, and it was starting to rise up higher, so I got in pretty close to that support right here, around 181.31, grind a little bit higher, at a profit target of 50 cents, actually ended up exceeding that, almost got to double that, but Google was a pretty nice win. It was a pretty good win. My concern here was that we had hit this all-time high, and I wasn't sure if we would break it. So that is what happened on Google. We hit that all-time high. We didn't quite break it that day. We ended up breaking it the next day. After we broke it, we came back in for the retest, and on that retest, on some strength on that, that's a good time to get in on Google. So yeah, this is again a bullish day trade, set a passive target, take a win on an LPTE day. Okay, 624 was AMGN. Where was 624? Right here. Ah, beautiful, beautiful. So rising up through its A VWAP Q is in a bearish channel, but we're have a nice head of steam here into that bearish channel, and we have some room to the top of the channel. So let's go back to 624. And this was a beautiful setup. I've been really liking this setup a lot, where the first candle or first two candles in the day are actually red as they're reversals. So they test, we have a gap up, we test the close of yesterday, we hold it, and then we reverse up pretty quickly. So we reverse up pretty quickly on AMGN, and then we clear this high at 313.44. So here is the high of the day here. We clear this, 313.44, and then the stock starts to rally higher for the rest of the day. Starts to grind up higher. So on the breakout of that level, so 313.44, comes back in, test the breakout, kind of just nothing for a while. And then this LRSI alert is a pretty nice entry point. Also, we got the break of the high of the day, which is when I entered. And then I took profits, took about a nice dollar in here. A little bit smaller than I would have liked, but certainly a decent win when we're so close to this all-time high. Resistance coming up here around 318. And that's pretty much right where we finish. You can see the stock breaks up high here. It tries to advance the next day and doesn't quite get to it. And then we get that bearish reversal pattern. If we look at SPY on the 24th, was a weak bearish trend day. I mean, it's pretty garbage price action for the most part. We get a move up, compress, move down, compress. So SPY's not really doing a whole lot. These grinder stocks on AMGN, it does end up picking up volume, but not initially. You can see that the volume was pretty low until we broke this 313.44 level here at 11:30. So once we started to break this level, then we saw some more fighting from buyers and sellers, and then buyers eventually got control of the ball game and managed to push the price up higher. But until we got through that level, the volume was pretty low. The price action was okay, but low volume meant that we didn't quite have the institutional conviction that we wanted to have. I had a second pick on this day, which was Carvana. So we took Carvana on the 24th as well. Another long. Let's go back here. All right. So, oh boy. Carvana, similar sort of pattern where you see in the opening, we're actually kind of testing the bid over here, and we're trying to get through this high of the day, which we don't quite get through. And this corresponds a little bit to this support level right here. So we're trying to get through that support level. We don't quite get into it, and then finally we get the breakout over here. Now, I think the difference here, and this is an interesting point that I just noticed, where we tested this once, and this fighting means that we're exhausting some of that supply. So when we break out, it may be that there's a less likely need to retest that level because we actually spent all that time compressing at that level. So it wasn't a breakout and then a pullback and then a go, right? Where sellers had to come in here and we had to shake out some more sellers before buyers were interested and we started to push the price up higher. Rather, we had a test once, right, when we shook out some sellers. Another test here, shaking out some more sellers, but now there's less sellers and buyers are equally matching this supply. Demand is meeting the supply here. And then when we get that exhaustion, that long compression around that major resistance point, we break out, that's when we start to move up higher. So that's actually a pretty interesting observation. I don't know if that's going to be holding, but that's something that I'm going to look out for as I see these interactions intraday at these D1 levels. So if you got in here on the breakout, you use that breakout level as your support, and you can ride that trade up higher. This is your first warning sign, bearish engulf. We have a wide range, but not as much volume as the prior candle. This candle ends up holding, and then the clue is that we quickly erase this candle, and we get back on track. And then you can probably get out at that hammer at 345. That's a good place to get out. Super high volume here, very long range, and this is a very clear hammer. There's no question that this is a bearish hammer. So we took Carvana also on the 25th, and this is a different type of day. It's pretty interesting how we could have we could trade the same stock, but there's two different price action patterns that are coming up here. Here we have a sort of a flatter open, and then we get this sort of compression breakout. The next day we're actually continuing that trend, and it's more of a grinder stock. We have a pullback, test the bid, fill in the gap in the first 10 minutes, and then we rise up higher. We hit this next D1 level, back off a little bit over here. What I like about this back off is that the volume is pretty low, and then we crack through it pretty quickly with pretty high volume. We have some tiny dojis over here. We have some high volume dojis that are giving a pause, and then we get back on track with a nice high volume green candle. Perhaps a little bit suspicious in terms of the volume price analysis. You'd expect this bar to be a lot bigger, right? If you look at the range of this bar, right, super high volume on this bar right here at 1130. I probably want to see a similar volume on a bar like 1240, but I'm not getting that. So a little bit suspicious. Just tells us that the trend is not super strong. And then we actually end up kind of compressing for a while, and then we close near the high of the day. So it was kind of a weird stock. I think it had pauses, moved back up, paused, moved back up, paused, moved back up, a little bit more stair-steppy in how it moved. But it never gave back a lot of the gains, and that's sort of the clue on stocks like these. You can see that here's the previous high. We came back, tested the previous high, launched up higher, right? Breakout, and you can look at this retest right here. Here's a support level of the breakout. Test that same support level, come back again. When we break out to the all-time high, we're testing this 8 EMA, which is pretty close to this next support level. So these prior relative highs often act as support once broken and when they see that retest. So we can use these guides as little retests over here. All right. So that's Carvana on the 25th. Market on the 25th. Again, LPT conditions. So we're largely ignoring it. And the clue that we got into Carvana was actually the fact that the market was selling off fairly early to middle part of the day, and this stock was pretty much doing nothing. So here is the market from 11:55 to 1 o'clock, selling off for that hour. Look at 11:55 to 1 o'clock. Stock is rising up, rising up. Huge relative strength on that. All right, 626 is when I gave the MU time spread, which we already talked about. I also had the MRNA day trade short. Let's take a look at that guy. So market on 626, LPT, nothing going on here. MRNA continued out and actually ended up hitting that 100-day SMA. So would have been a pretty nice swing trade as well. Let's take a look at this on the 26th. So beautiful J. Took one trade here. LRSI pullback. We start to break through. We have another trade later in the day. Works pretty well for an overnight swing. You can take profits on this key red bar. And then, yeah, just sort of continuing down. This was the first, an interesting little pop-up here. Super long candle on this guy. And then it stalls and ends up getting faded. And then we actually end up testing that 100-day SMA. And you can see how the stock is chopping around that level. So, yeah, on this test, so when it hits that 100-day SMA, that's when I would take my profits on the stock. And that big pop-up in the smackdown is a nice sign of weakness. There's also some horizontal support at that level as well. So if it can clear that, we may have a pretty nice potential day trade on our hands. I'd want to get below this low, and then I'd be interested as a future setup. But just zooming back into this day trade, I'm doing sort of a walkaway analysis accidentally over here. I mean, this is just pretty textbook. You have a breakout, a retest, right? Weak bounce in the retest, and then we get the next leg lower. As you can see that this move is starting to accelerate, starting to slowly wind down, right? Hits some support here. The super high volume doji, again, sign of strength in this case after a very, very bearish move. Bounce up higher, can't get anything going after this green candle, ends up being a solo. We start to give away some of these gains, and then we get the next leg lower. So yeah, I mean, this is a really good one to study in terms of the price action, in terms of how it reacts to different D1 levels. Volume, buyers, sellers, when to enter, when to exit. There's a lot of information on the stock. So if you're having trouble with day trades, I think this is a really good one to look at. All right, last pick here was S long on 627. So here's S. And if you remember Shop, this is actually a pretty similar situation to Shop where we have a bearish chart, but the very short-term momentum is actually bullish, and we get this breakthrough the technical resistance, and we're wedged between these two technical levels between the SMAs. So similar setup to Shop, and that's why we also took it as a day trade. So strong volume over here. Market pretty LPTE for this day as well. Not really doing a whole lot, and that's where we get our signal over here. Market's going down, stock is grinding up higher, pulls down a little bit, finds some support, just enough to trigger this LRSI alert. And this is a sharp move down, but this is a pretty sharp move up higher. And 1150, 1155, these two are your entry candles. That's your window of opportunity. The clue is that we did get some volume here, but we got some nice volume on the way back, and we covered a lot of this distance very, very quickly, right? This is 1, 2, 3, 4, 5, so 25 minutes on this pullback to get this move. And then in 10 minutes, we erased 80% of those gains, right? We erased 4 out of those 5 candles in 10 minutes. So that is a sign of strength. It was also above the VWAP. So you get in here, and then when the trend starts to stall out, you can also get out of the trade. Does continue a little bit higher, but really the meat of the move, in my opinion, is here to here. And then here to here is the meat of the move. All right. So that is it. So for the month of June, we had 19 total trades, 17 wins, 1 loss, and 1 break even. I also gave 28 total picks, but we only had 19 trades. So there was 9 trades that were picks, but we didn't end up taking them because the setup did not end up panning out. It's an interesting stat to track because out of all of the filtering that we do in terms of our scanning, in terms of our lists, in terms of waiting for our setup, we often have several potential candidates, but some may set up, some might not. So interesting stat to track. A couple things I took away from this. The first is on stocks like Shop, right? So let's look Shop and S, right? These are good to day trade, but you want to be careful swinging this because sellers are in control, and you really feel like, oh man, this has to at least test the 200 SMA, right? But in both cases, they didn't. So sellers may come in a little bit before that 200-day SMA, and you have to be careful of that. The other thing is that I don't know if this is going to necessarily always work, but I just feel like there's just a lot of TA in the way here. If I look at the high of this candle, 68.21. The low of this candle, 68.01. So it looks like there was probably some horizontal support that came in before the 200-day SMA, and that's why we got a little bit of stoppage. Even this here, let's look at this high. Yeah, 68.04. So it looks like this horizontal support came in before the 200 SMA level. So that's the tricky things with these types of day trades. It's not as high as probability, in my opinion, because it really just feels like the chance of reversal is higher, and if you don't get out of the trade at the right time, you are going to have to hold through a long period of time or maybe take a big loss. Let's look at the chart for S. Seems like a pretty similar sort of chart, wedge between two SMAs. So this is a day trading opportunity, but probably not my main day trading opportunity. Now, on the charts that did look pretty well, day trades did work, but also swing trades work pretty well. If you look at ARM, right, a next day swing would have worked pretty well on a stock like ARM. Similarly, let's look at MRNA, right? It had a nice, this is a pretty strong reversal candle. So we had a chance to at least test this level. Now, the question is, what's the difference between the setup like MRNA and a setup like S, right? Because you could say, look, MRNA is a bullish chart, and now it's reversing. So like, what the heck? If I look at S, I mean, it's a bearish chart and it's also sort of reversing. So how do you know when to stick with it and have it test the 200-day SMA, right? Or have it not test the 200-day SMA versus S and mRNA? And that is a pretty good question. To me, it really seems like it could come down to TA. So let me look at S here, and let's see if we missed any TA on S that could have potentially, anything that could have come up over here at this high, maybe somewhere here. Try to draw this level. Maybe something like that could work. Yeah, I mean, this is an old gap. I mean, there's some touches here. It's not the end of the world, but really, I'm not sure why. I mean, doesn't seem to be any sort of major TA at that point. So it's sort of a judgment call. And I think you have to sort of weigh out the risk reward. I think what I do like about mRNA here is that we closed near its low, and probably the clue is in that intraday price action. Way stronger intraday price action and a stronger signal candle on very high volume coming through here. So this is a far cleaner break, and there's far more room to that level. If I look at something like S, you can see how we did have that little tail here, although this is a much cleaner break. If we look at something like Shop, where Shop had that strong sell-off initially on that day, and we couldn't quite get back to it. So not as long of a candle, not a ton of room, and we still had a little bit of a tail. So maybe the clue is you really want to wait until the close for those kind of stocks to get in. Any sort of tail may actually reduce some probability here. Stocks like Google broke through here. I mean, we had it over here, grounded up higher over here. This was not a bad trade. It could work out as a swing, but we didn't get the breakout. And even when we do get the breakout on Google, you can see how it takes a pretty long time for that to actually confirm and make a next leg higher. Right, here's the 25th, 1, 2, 3, 4, 5, 6, 7 days for that to actually move up higher. So Google, I mean, look, you could swing it. Not a bad swing. High volume coming in here. It's something I probably have to think about a little bit more. APTV, interesting example, right? We took that breakdown over here on the 11th and had a lot of follow through into the gap. So probably could have traded this gap fill sort of day on the 14th, and then it rejected off the gap, and then we got a pretty big move down. So there's something happening in this stock. I don't quite know what, but I don't think I would have traded this as much because maybe I could have used the gap as a target. That may have worked. But you can see there's a little bit of TA coming in the way here that it managed to cleave through. APTV is again fine as a day trade, but there's some more areas where you got to be more cautious. But yeah, in terms of the other picks, in terms of my swings, if we take a look at these. I had some timely exits on some of these, such as Take Two, such as Cost, such as LXMA. So you're certainly seeing that some stocks that are looking good now can sort of stall out and sort of reverse. We don't have that market tailwind in either direction. Other stocks like AEO, again, popped up and then came back in. So I think it just seemed like it is a little bit more difficult to swing trade in this environment, considering its lighter volume and that we're rallying up. But it does seem like the 1 ATR target can work pretty well in a couple of days. So, yeah, that's pretty much it for June. I think, again, to summarize all those takeaways, I think we are currently doing a lot of things right in terms of a lot more day trades, finding really good picks, not taking too many picks, not overloading our portfolio one side or the other. On our swings, we're being a little bit more nimble in how we decide our swings. And it seems like if you miss your nimble entry, you're going to have to wait a while before you get your profitable entry, or your if you miss your nimble exit, my bad, right? You're gonna have to wait some time before you get that next profitable exit. Even on a stock like Cost, where like this is a pretty nice stock, but doesn't have as much follow through. So it does really make me think that I may want to consider a lot more premium selling strategies on some of these stocks, or just some very, very long-term in the money calls on these stocks, and not try to get out immediately, but maybe try to ride these for like 2 to 3 weeks or even a month to get that grindy move higher. So I may have to have a more longer term horizon, because we're not quite getting those moves that we originally expected to. Thanks for watching, everyone. Hope this review was helpful. We're excited for July. I'm expecting to have some more earnings time spread picks, potentially some more swings. We'll see how it goes. Some premium selling strategies as always, and of course, our good old day trades.